Hello and welcome back to your favorite channel, The Big Reset Investment. Today we're delving into the insightful world of Robert Kiyosaki, renowned author of Rich Dad, Poor Dad, as we explore his predictions on the impending market crash and the subsequent rise of gold and Bitcoin. Kiyosaki's thought-provoking insights have been stirring up the financial world, and we're here to dissect them for you. We have a lot to cover today, so let's dive right in. Robert Kiyosaki, well-known author of Rich Dad, Poor Dad, has been making some bold predictions lately. He's been a consistent voice of caution in the financial world, warning of a possible market crash on the horizon. For Kiyosaki, the alarm bells started ringing with the Evergrande debt crisis in China. He predicts that this crisis will not only negatively impact China, but will also have a ripple effect on US stocks and real estate. He firmly believes that Evergrande's inability to repay its outstanding loans and an overvalued property portfolio may lead to an imminent real estate crash, which could potentially spread like wildfire to the US markets. This potential collapse, Kiyosaki warns, could have significant consequences for the Chinese economy and global markets alike. He draws parallels to the Lehman Brothers collapse during the global financial crisis, hinting at the magnitude of the potential impact. It's not all doom and gloom, however. Kiyosaki also sees a silver lining in this crisis. He believes that such market sell-offs can create golden opportunities for smart investors who are prepared and know where to look. But what about those who aren't prepared? Well, Kiyosaki doesn't mince his words. He warns that this crisis could be a financial disaster for those who are unprepared. He advises investors to consider gold, silver, and Bitcoin as stores of value, and to be ready to seize the buying opportunities that arise during market downturns. In a nutshell, Kiyosaki's market predictions are a clarion call for caution and preparedness. He encourages investors to stay vigilant, to understand the risks and opportunities in the current financial landscape, and to make informed decisions. Kiyosaki warns that this crisis could be a financial disaster for those who are unprepared. In the face of a potential market downturn, Kiyosaki has some specific investment advice. He urges investors to consider gold, silver, and Bitcoin as viable options for storing value. These assets have proven themselves to be resilient, even in the face of economic uncertainty. Gold has long been recognized as a valuable commodity, a standard by which other currencies are often measured. Its physicality, scarcity, and universal acceptance make it a reliable store of value, especially during times of financial turmoil. Silver, though less glamorous than gold, holds its own merits. It's not only a precious metal but also has numerous industrial applications, adding to its intrinsic value. Like gold, silver is a tangible asset that can act as a hedge against inflation. Then there's Bitcoin, the digital gold of the 21st century. As a decentralized cryptocurrency, Bitcoin operates outside the traditional banking system. Its value isn't tied to any specific government or economy, which can be a significant advantage during a market crash. The inherent scarcity of Bitcoin, with a fixed supply of 21 million coins, also contributes to its appeal as a store of value. But why these assets specifically? Kiyosaki emphasizes the buying opportunities that arise during market sell-offs. As prices dip, smart investors can acquire these valuable assets at a discount. In the long run, these purchases could prove to be profitable investments, especially if traditional markets continue to fluctuate. It's worth noting that, while Kiyosaki advocates for these assets, he doesn't guarantee success. Investing always carries risks, and it's crucial to conduct thorough research and consult with a financial advisor before making any significant investment decisions. Kiyosaki sees these precious metals and Bitcoin as a safe haven in the face of a potential market crash. They offer a form of financial security, a way to preserve wealth when other assets are failing. In an uncertain economic climate, that kind of security can be invaluable. Interestingly, Kiyosaki has been particularly vocal about the value of one specific precious metal. Yes, you've guessed it right, it's silver. Often overshadowed by its glamorous cousin gold, silver has been a point of focus for Kiyosaki in recent times. He believes that silver represents the best value investment in today's market. But why is that? Let's delve a bit deeper into his reasoning. First and foremost, Kiyosaki points to the low price of silver. Compared to gold, silver is far more affordable, making it a more accessible investment for a wider demographic. This affordability, coupled with its intrinsic value, makes it an attractive proposition for those looking to diversify their investment portfolio. But the value of silver, according to Kiyosaki, isn't just in its price, it's also in its practicality. Unlike other investments, silver can be spent without government tracking. In an era where privacy is becoming increasingly valued, this feature of silver might be appealing to many. Furthermore, silver's commercial uses add to its attractiveness as an investment. It's widely used in industries such as electronics, medicine, and renewable energy. This broad usage provides a certain level of demand stability that can help hedge against market volatility. However, it's not all rosy. Kiyosaki's endorsement of silver comes with a caveat. He has expressed concerns about the US dollar, predicting it to lose value. This, he believes, could potentially impact all investments, including silver. But it's in these challenging times that Kiyosaki sees opportunities. Despite his concerns about the market, Kiyosaki sees the upcoming crash as an opportunity to buy bargains. He encourages investors to take advantage of these periods of market downturn to accumulate valuable assets like silver at a lower cost. So, in essence, while the storm might be brewing, Kiyosaki sees a silver lining. The question is, do you? So, how can we prepare for this potential market crash that Kiyosaki predicts? This is the question on everyone's mind as we delve into the strategies proposed by Robert Kiyosaki himself. Kiyosaki's advice for weathering the storm hinges on a few crucial points. First and foremost, he advocates for stocking up on essential items. This might seem a bit extreme, but let's think about it. In times of economic turbulence, having a supply of necessary items could provide a safety net. This includes items like canned foods, toilet paper, and other everyday necessities. It's not about expecting an apocalypse, it's about being prepared for potential disruptions. Now let's shift our focus to the financial side of things. Kiyosaki urges investors to keep a close eye on the bond market. Why? Because he believes that a collapse in bond prices could trigger a broader slump in asset prices. Being vigilant and staying informed about these changes could give investors the upper hand, allowing them to make strategic decisions and protect their investments. But what about gold, silver, and Bitcoin? Kiyosaki has long been an advocate for these alternative investments. In times of market turmoil, these assets could serve as a store of value. They might not be subject to the same fluctuations as traditional stocks and could potentially offer a degree of protection against a market crash. It's also worth noting that Kiyosaki views market crashes as an opportunity. While the thought of a market downturn might seem scary, it can also create buying opportunities for those who are prepared. Smart investors could potentially scoop up undervalued assets during a sell-off, positioning themselves for gains when the market eventually recovers. Kiyosaki's advice may seem drastic, but he believes that those who are prepared will be in the best position to weather the storm. So whether you agree with his predictions or not, it's certainly food for thought in these uncertain times. We'll just have to wait and see how the market unfolds. Let's take a moment to summarize what we've learned from Kiyosaki's predictions. Firstly, Robert Kiyosaki, the author of the bestseller Rich Dad, Poor Dad, has been vocal about his concerns regarding a potential market crash. Drawing parallels to the Evergrande debt crisis in China, he warns that a similar situation could have a negative impact on US stocks and real estate. The key takeaway here is to be prepared. Such a crash could spell disaster for those caught off guard, but it could also present buying opportunities for the astute investor. Next, we delved into the value of gold and Bitcoin. Kiyosaki has consistently advocated for these as stores of value, particularly in times of financial instability. Gold, a traditional safe haven, and Bitcoin, often referred to as digital gold, could potentially offer some protection against market volatility. The emphasis here is on diversification and the preservation of wealth. We also discussed the role of silver, another precious metal Kiyosaki is bullish on. He touts silver as the best value investment in today's market due to its low price and commercial uses. Besides being a potential bargain, silver offers an added benefit of being spendable without government tracking. Finally, we touched on how to prepare for the impending crash. Kiyosaki's advice is to stock up on essential items and pay close attention to the bond market, as a slump in bond prices could signal a wider downturn in asset prices. In essence, the strategy is to be proactive and ready to capitalize on any opportunities that may arise during a market downturn. These are serious predictions, and as investors we should consider them carefully. That brings us to the end of our discussion on Robert Kiyosaki's market predictions. We've delved deep into the fascinating world of finance, exploring Kiyosaki's views on the potential market crash and the rise of gold, Bitcoin, and even silver as valuable investments. Throughout our discussion, we've seen how Kiyosaki's predictions, though alarming, aren't without merit. He presents compelling arguments about the Evergrande crisis and its potential global impact, drawing parallels with the Lehman Brothers collapse. His warnings are a wake-up call, urging us to consider the current state of the economy and the value we place on traditional investment options. We also examined Kiyosaki's views on the value of gold and Bitcoin. In a time of financial uncertainty, these assets have been touted as safe havens, with their inherent worth providing a cushion against market volatility. It's a sentiment shared by other prominent investors, further solidifying the importance of considering alternative investment options. Kiyosaki's emphasis on silver as a valuable investment was also noteworthy. His perspective on this often overlooked asset underscores the importance of diversification and the potential benefits of exploring unconventional investment avenues. In the face of potential economic turmoil, Kiyosaki's advice to prepare for the crash is timely. His approach of investing in precious metals, cryptocurrencies, and even essential commodities is a testament to his belief in being prepared for all eventualities. As we conclude, it's crucial to remember that while these predictions provide valuable insight, they are just that, predictions. The future is inherently uncertain, and while we can prepare, it's essential to do so wisely. Make informed decisions, conduct your own research, seek professional advice, and remember, investing always comes with risk. Our journey doesn't end here. We'll continue to explore the intricate world of finance, providing you with insights that can help you navigate your investment journey. Thank you for watching. If you found this video helpful, please give it a like and subscribe to our channel for more investment insights. Stay safe and stay informed.